Hello, welcome to the weekly technical analysis review here at xm.com. I'm Rafi Bajan, currency analyst, and today is Tuesday, September the 19th, 2017. Today we will look at the dollar yen, euro dollar, and the pound dollar pairs, as well as WTI oil futures. So let's start with the dollar yen. We can see that although in the longer term the picture remains pretty much range bound for dollar yen, in the near term we do see a strong upside momentum. Prices have strongly rebounded from the 10-month low of 107.82 seen earlier in September. At the moment, we are seeing resistance at the 61.8% Fibonacci level of the down leg from 114.49 to 107.82. A break above that level should bring prices into contact with the 200 moving average currently at 112.19, and above that we have the 78.6% Fibonacci level just below the 113 level. RSI, both the MACD and the RSI suggest there is strong indication for further upside gains. RSI hasn't quite reached overbought levels, and the MACD has turned positive, and the histogram is above the red signal line. But if we do see a downside reversal, support should come at the 50% Fibonacci level at 110.90, followed by the 110 and the 109 handles. Let's move on to the euro now, because euro, we can see, of course, it remains very much bullish, trading within its that linear regression channel since April. If we zoom in much closer and we take the Fibonacci level from the down leg from 1.2092 to 1.1837, we do see there is resistance coming at the 61.8% Fibonacci level of that down leg at 1.1995, just below the 1.20 level. The intraday bias is to the upside. Stochastics are pointing up and are positively aligned. The MACD is comfortably above zero and remains just below its red signal line. So we are looking at the MACD. It's not suggesting that the upside momentum is as strong as it was earlier, say back towards the end of July. But overall, we are still pretty much looking at a bullish picture. If prices do manage to break above the 2.5-year high 1.2092, the next key resistance should come at the 1.2250, followed by the 1.25 level. Recently, the bottom linear regression channel line has been providing support. We can see prices have been just trading above that that linear regression line in the lower half of that channel. If we do see further weakness, we should see the 38.2% Fibonacci at 1.1935 and the 1.19 handle acting as support, and a drop below the channel. We should see support coming from the 50-day moving average. Looking at the pound now, we can see the pound has seen a dramatic reversal from bearish to bullish since August. It's currently trading at a 15-month high, hitting 1.3618 yesterday. Prices have come back down, and the fact that prices rose sharply above the Bollinger Band, the upper Bollinger Band, that explains why we saw that correction yesterday. At the moment, the 1.35 handle is acting as both support and resistance. Further down, we should see support coming from 1.3435, and below that from 1.3380. However, the bullish is still, despite that yesterday's correction, we are still very much in bullish territory. RSI is just at overbought level, and the MACD is clearly very bullish, with a histogram sharply above the upward trending signal line. Further up, resistance will likely come from the 1.37, that should be 1.37, not 17, from the 1.37 handle, to make new fresh post-Brexit referendum highs. Let's have a quick look at oil futures now. This is the oil October 2017 contract. If we take the Fibonacci down leg from 54.99 from February to 42.02 in June, that gives us strong resistance at the 50 level. We can see 50 level has acted as resistance several times in the past as well, and it's doing the same now. A break above that level would bring into scope the 52.20 level. We could potentially see prices targeting that level, given that RSI is currently in positive territory at about 60 and hasn't reached overbought levels yet. But if we do see a downside reversal, support should come from the 50% Fibonacci at 48.50, followed by the 38.2% at 47 and 23.6% Fibonacci level at 45.10. That's it from me. Thank you very much for watching, and have a great day.